Hey everyone, it's Imran from Options Insight, back with another macro options spotlight. Okay, so stocks consolidated yesterday. Tech market, the NASDAQ, sorry, the tech stocks pulling back a bit. Cyclicals bouncing, led by energy. Europe also gained a bit, about 1%, gaining some ground after those losses at the end of last week on the banks. In commodities, oil found some strong support, a bit of a short cover bid coming back to that market. A lot of positions have been liquidated, it seems, from the positioning data, and so we've got a 5% gain, retracing almost half of the month sell-off. And then you had gold suffering a bit, obviously touching that 2000 level back end of last week. Continues to kind of consolidate and pull back. Nothing too sinister. Still looks like a consolidation move off an impulsive leg higher. So, if anything, dips to be bought in gold for now, it seems. Volatility-wise, lower across most of equities. We saw this 4,000 level seems to be acting like a bit of a gravitational force again. I was looking for it to push a bit higher, up towards that 40-65 area that we know is a big long gamma zone, but that doesn't seem to be happening just yet. And without a catalyst to really get us up there, I'm not really convinced we're going to break much above 4,000, but remains to be seen. Commodities, we're talking about into month end there with that big quarter end expiry coming up on Friday. Commodities did see some vol selling as well. We saw oil down 3 points, uranium similar, gold and gold miners were also down, but copper and silver vols managed to hang in there and be relatively unchanged. Carry-wise, we are seeing more negative. You can see a lot of the green bars disappearing. So more negative as implied vols go down, then that generally tends to send carry towards more negative, unless the realized just completely falls off a cliff, which hasn't happened yet. Now, we do think that post-month end and into Easter, we are likely to see realized vol come down. That's going to send all these carry numbers back this way towards more positive as the big moves on the whole banking trouble drop out of the sample, and we get a bit more calm going into Easter if that is how it materializes, which I suspect it probably will. And then gold, minus 35%, giving you the best negative carry there for long gamma players. You're getting the most movement or the best value gamma basically in gold. Skew drifting back down, seeing a bunch of red here. Obviously was in elevated percentiles. It's starting to turn south again as the market's not completely falling out of bed. There is likely to be some persistence though to keep skew bid until we get a bit more clarity on the banking side and really the state of these banks, which is not so clear just yet. Skew starting to mean revert in the metals as well. Obviously, it caught a massive bid for calls, starting to come back a little bit, but still very much in call territory. But then oil skew also coming back down 2 points yesterday, and then you've got the very high percentiles in NatGas and uranium skew still up there. Okay, now there's some interesting positioning data out from the CFTC. Obviously, we've seen a lot of weakness in the banks and the cyclical sectors, but broad indices have held up. We had flagged yesterday that it's been a tech-led rotation, and that's why those big indices haven't fallen out yet because of the big weights of these mega cap tech names. Now, if you look at the futures positioning, it has flipped quite significantly shorter. So after, in the last week or so, it's the biggest 1 week drop as we've seen. $41 billion has been the incremental change in S&P futures positioning to the bearish side. So that does show us maybe that sentiment is getting a little bit too overcooked on the downside. Now, there may have been some of that positioning change may have been due to the massive options expiry, which was also captured in that week. So that might be distorting the numbers a little bit, but it is something that was flagged by Goldman's as maybe a reason why you be careful being too bearish right now if there's such a big short position. And we also know with skew elevated, with hedge fund net exposures quite low, that an upside move is probably the one that's going to create the most pain in the near term before we get any more material weakness in S&P and we break back below those sort of 38, 3,900 levels that have held so far. Consumer confidence data is also out today, likely to show some poor future expectations. Obviously, we've got a looming recession now on everyone's radar. And the jobs market, whilst it's been robust of late, and that's kept the kind of current present situation data relatively high, it's the forward-looking expectations that have been rolling over. This is something flagged by Saxo. if you look at the spread between the present situation and the future expectations, that has been at the lower end of the range, right, going back many, many years, right? So we, now that we've had the recent banking turmoil, I wouldn't be surprised to see this red line move down even more as those future expectations roll over, given that the recession looks so much more likely now than it did maybe a month ago. Okay, now looking at trade ideas, the thing that kind of stands out to me at the moment is NatGas. So here's a chart on NatGas. You saw obviously a massive sell-off from the highs. We don't even need to talk about that. But in general, we've had warmer weather. We've had higher production. These things are generally keeping a bit of a lid on this thing. It did have a little bit of a momentary bounce, but it's retested its lows. So that's what I like to see. I like to see it bouncing and then retesting the lows on lower momentum before a major reversal can take place. So here we've got our usual momentum indicator here. Is showing us a potential bullish divergence. In other words, the level of momentum here is not as low as it was last time we reached the lows in price. So that's what we call a bullish divergence, and that could be a sign of some exhaustion to the downside. So we're looking for a bounce in NatGas. This is the UNG ETF. It's currently trading around $7. We'd be looking for a bounce back towards that $10 or even higher. So that's the kind of idea that we're looking at. Now, obviously, natural gas is the highest vol commodity that we look at in our dashboard. So you need to be careful about how you're going to structure a bullish trade, maybe taking advantage of these higher vols. But also, obviously, you don't want to leave too much open-ended risk on something that can be so volatile. For all we know, nat gas prices, I mean, they're sitting just above $2 right now. They could go to $1, right, for all we know. So the price could halve. So we need to pay attention. We need to be careful. And we need to structure a position that doesn't blow us up if that happens. So looking at the dashboard, what would I do? So looking at the dashboard, we've got the skews pretty elevated. You can see the strategy compass is talking about selling puts. Generally, in such high vol, high risk stuff, I would go for put spreads, so out of the money put spreads. So with prices here at around 7, I'd be landing on selling a 6.5 put spread, $1 wide. You can collect about 25 cents for that. Obviously, May is a nice expiry. You can see it's kind of the hump there in the curve. So if volley is going to get hit, we don't mind selling May, and also it's short dated enough that we're going to earn our theta if we sell it. So I think May put spreads make sense. The carry is positive. We've got 24 vols of positive carry there, which is pretty decent. So the carry indicator is kind of pointing in the earn territory. So in general, we like that. Now, the only drawback of just selling a put spread is that there's limited amount that you're going to make selling that. You're going to make 25 cents, and you're going to take risk of losing 75 cents. Now, because I do see this bullish divergence signal, I'm a bit more comfortable with the idea that I want to layer on a bit more delta. So how would I layer on some delta? Okay, that's it for today. Thanks for listening. I'll catch you all tomorrow. Cheers.